Yes, today we are going to see provision for doubtful debts, or what we call provision for irrecoverable debts. Provision for doubtful debts, as the name implies, doubtful, that is, we are not sure that we will obtain money from credit customers when selling goods on credit basis. Some of the customers may not pay their business. So in this case, we need to prepare a provision for doubtful debts in order to calculate the amount of money which will not be obtained by credit customers. We are not sure that we will obtain money from credit customers, so in this case, we open a provision for doubtful debts account. Provision for doubtful debts means future bad debts. Bad debts is an actual loss. Provision for bad debts is a future loss. So if we are expecting that some consumers will not pay their business, so in this case, we will have to open a provision for doubtful debts account. Provision for doubtful debts is always calculated on trade receivable. For example, if provision for bad debts is 20%, it means that 20 over 100 times trade receivable. So in this case, we will obtain the amount of money that will not be obtained, that will not be received from credit customers. So if we are calculating provision for doubtful debts, and we get provision for doubtful debts at the start, let's say 500, and when we are calculating provision for doubtful debts at the end of 3 months or 4 months, then we get 700. So it means that there is an increase in provision for doubtful debts. An increase in provision for doubtful debts is a loss, and therefore the difference will have to be debited in the income statement. If provision for doubtful debts decreases, it will be a gain, so the difference will be credited to the income statement. So increase in provision for doubtful debts, debit income statement, credit provision for doubtful debts. Decrease in provision for doubtful debts, debit provision for doubtful debts, credit income statement. So here we have to calculate first provision for doubtful debts for each period, let's say year 1, year 2, year 3, year 4. Then we will use a provision for doubtful debts that we have calculated in order to prepare provision for doubtful debts account. Normally, provision for doubtful debts account has a credit balance. It will not have opening balance because at start it is impossible to know whether some customers will not pay their business. So we will get provision for doubtful debts at end of a period. So in this case, there is no provision for doubtful debts at the start. So we will get provision for doubtful debts at end, and therefore we have to record it in the provision for doubtful debts account for each period. And then we have to transfer to income statement provision for doubtful debts, and then we have to show in an extract statement of financial position and the current assets, trade receivable, less provision for doubtful debts. In order to be more explicit concerning this topic, we are going to work out the question on provision for doubtful debts, how to prepare provision for doubtful debts account, extract income statement, and extract statement of financial position. Yes, today we are going to see how to prepare provision for doubtful debts account, or what we call provision for irrecoverable debts account. Provision for bad debts is always calculated on trade receivable. So here we are, for different years have been given, and trade receivable for different years. 2017, the trade receivable is 50,000, therefore the provision will be 10% of 50,000, 5,000. And for 2018, 62,000, the provision will be 10% of 62,000. And in 2019, 40,000, provision 10% of 40,000, 4,000. And 2020, 25,000, 10% of 25,000, this will give us 2,500. So first of all, we have to calculate provision for doubtful debts for the different years. So for 2017, the provision is 5,000, and 2018 provision 6,200, 2019 provision 4,000, and 2020 provision is 2,500. Now we will have to prepare the requirement, make a provision for recoverable debts of 10%. So each year we have to calculate the provision at 10%, required provision for bad debts account for 2017, 18, 19 and 20. We know that there will be no opening balance for provision for doubtful debts account, because at the beginning it is not possible to know how many debtors or trade receivable will not pay the business. So there will be no opening balance for the first year, 2017. So it will have a credit balance, the closing balance will be, so we'll have to insert the closing balance. How much? 5,000. This closing balance will be followed by balance CD, 5,000. And this one we have to close it, 5,000 here, 5,000, 5,000 minus 0, 5,000. This will go to income statement. Income statement. This is for the year 2017. Now we are going to prepare provision for doubtful debts for 2018. The closing balance for 2017 will become opening balance for 2018, 5,000, and then we have to see the closing balance for 2018. What is the closing balance? 6,200. This will be followed by balance CD, 6,200. Then we have to close the account. This will be 6,200, 6,200 minus, we'll get income statement 1,200. So the closing balance for 2018 will become the opening balance for 2019, 6,200, and the closing balance for 2019. What is the closing balance? 4,000, and this will be followed by minus CD here, 4,000, and then we have to close it, 6,000 here, 6,000 minus 4,000, this will give us 2,200. This is for 2019, and the closing balance for 2019 will become opening balance for 2020, 4,000. So what is the closing balance for 2020? The closing balance we have calculated 2,500, and then it will be followed by balance CD, 2,500, and then we have to close it, 4,000, 4,000, 4,000 minus 2,500, income statement 1,500. And then we have to prepare the extract income statement, how it will appear in the income statement. So income statement for the first one is on the credit side, and then it will be recorded on the debit side. Provision, which year? 2017. We write down provision for bad debts, how much? 5,000. And then the second one, income statement on the credit side, again it will be on the debit side, 2,500. 2018, this will become how much? 1,200. And then we have to record the last one, this one. This is on the debit side, it will go on the credit side for 2019. Provision for doubtful debts, how much? 2,200. And this again on the debit side, this will be 2020 on the credit side. Provision, how much? 1,500. So here we are, extract income statement, and now we are going to prepare the extract statement of financial position. How will it appear on the statement of financial position? So what we have to record? We have to record the trade receivable given in the question. Trade receivable. How much is a trade receivable for 2017? 50,000. And for 2018, 62,000. And then 40,000. And the last one, 25,000. In this we have to less provision that we have calculated. Provision for bad debts we have calculated. This one, 5,000. This is 6,200. This one, 4,000. And then 2,500. Then we have to calculate it. This will give us the net trade receivable. Net trade receivable. So this one, 45,000. And this one, 70,000 minus, this will minus, this one, 36,000. And this one, 22,500. And this one we have to deduct 4,000, second 6, second 5, which so. Okay, you have to calculate it. Now, let's see first. The first one we have to calculate provision for each year. Provision for doubtful debt is calculated on net trade receivable. For example, 10% of 50,000. The second step, we have to record these balances in the provision for doubtful debts account. So it will have a closing balance on the credit side. Our closing balance will become opening balance for the next accounting period. So the closing balance 5,000, we have just to place it here. And then for 2018, the closing balance for 2017 will become opening balance. And it will go like this. The closing balance for 2018 will become opening for 2019. And then we write down, we record balance for 2019. And the closing balance for 2019 will become opening balance for 2020. And then we have to record the closing balance. The difference will go to the income statement. Then we prepare the extract income statement. Very easy, this one. This is on the credit side, the transfer. It will be recorded on the debit side. This one on the credit side, it will go on the debit side. This one on the credit debit, it will go on the credit side. Debit on the credit side. And then we have to prepare the extract statement of financial position. We just have to place record the trade receivable given in the question, and less provision for doubtful debts that we have calculated. The difference will give it net trade receivable. So here we are, so far concerning provision for doubtful debts account. So next time we will go to see a new topic which is related to provision for doubtful debts. For the time being, thank you very much for your attention.